it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
Hey, good morning, everybody. Welcome to the morning show. It's the best morning show in finance. Did you know that? Spencer Israel here with Steve Strazza and JC Parets. What's going on this morning? So we got monthly candles. Yes, hot, fresh out of the oven, the factory, wherever they're made. I don't know. Monthly candles. So we're going to go over that today. We do have a few earnings as well. Caterpillar, Uber, HSBC, which I have a feeling JC will want to talk about, or maybe not. I don't know. How we're doing this morning? We are looking, all right, we're down a little bit. Futures down across the board. S&Ps, gold, NASDAQ, Bitcoin, oil, all in the red. That's okay. That's okay. Here we go. Todd Sohn is the guest today. Let's get this going.
Good morning, Mr. Strazza, 2 days in a row.
Todd said he's not going to send any charts because he just wants to talk about Asia the whole time.
Wait, hold on. Can we talk about this blue thing for a second that I didn't get the memo on?
I always
wear the memo. We had a meeting about it yesterday. You weren't in the meeting. You didn't get the invite.
It's not on my calendar.
Oh, this guy with his calendar. By the way, where are candlesticks made? Are you kidding me? Fresh out of the oven, baby, right at JC's house. Let's go.
Right.
Let's go. Dude, my wife makes cinnamon buns for my daughter all the time, and they smell so good. Cinnamon buns not on the Perlman program there, Strazza.
I'm telling. I was just on the phone with him. We had our monthly checkup where he just yells at me for how I live my life.
Yeah. How bad are you doing?
I mean, I thought I would get some sort of like a pass because of the Asia trip. No pass.
He's like, he was in Bangkok with Giancarlo. What do you think he was
Phil
doing?
does not care about that.
Yeah.
Bangkok with Giancarlo is not exactly the type of environment where you're going to eat healthy and get some rest and those sorts of things, right?
Giancarlo was good in Bangkok. I won't speak for him, but Giancarlo behaved in Bangkok.
And where did he misbehave? Hong Kong.
I don't know what you're talking about.
Oh, my God. All right. I'll get it out of you in the golf course later this week. Strazza's coming up. Yeah. Playing a little golf later this week. What do you think about that, Spencer?
Ooh, that sounds exciting. Yeah. I would have FOMO if I wanted to golf with you, but I don't really want to golf with you guys because I can't golf.
Oh, all right.
Well, I can't golf either, dude. I suck. I'm a terrible golfer.
Yeah.
Okay. Listen. Enough with the golf game. Can we get to the state of the markets because we got some freshly monthlies. Yeah, but we got some monthlies.
Just so we're all clear, blue is my color. Blue is my color. Okay. I wear blue all the time. I don't know.
I mean, my colors are orange and green, but my wife says I look ridiculous when I wear that. So
she's not wrong.
All right, Strazza, I don't know how they do it in Asia. Spencer, I don't know how they do it in New Jersey. But where I come from, in downtrends, you don't see a lot of new highs. New one-year highs once again for both the S&P 500 and the NASDAQ 100. Fourth month in a row that they both do that, Strazza. Almost like maybe it's like a trend.
What do you update this chart like once a quarter? What is this?
The powers that be updated for me. It's just data. I press a button and it just updates it. It's not my fault that it keeps going from the lower left to the upper right. Like, I don't have a say in the matter. As investors, we can either profit from it or not, right? Like, fortunately, we live in a free country, and if you want to be shorting stocks in a bull market, you have the right to do that, right? Like, if you want to not make money in bull markets, like, you're free to do that. Like, that's pretty cool, I think.
So, yep, the strongest indexes are more or less back at their former highs. Close, right?
Hold on, you want to talk about strongest indexes? Excuse me. Give it to him. Give him the strongest index. This ain't even it. Give it to him.
Industrials?
You're close. Can we get the Fonz? Get your shit together. Give them the chart.
Transports. Who knew, right? Seriously.
Highest monthly close in history, Strazza.
Hey.
Highest monthly close. This goes all the way back to the 1880s when it was called something else. We've never seen a month close this high ever.
I mean, this happened fast too, right? Because we were calling transports laggards not long ago, right?
Well, you know, I guess, I mean, the buoyancy remained, you know, I guess it depends on your time horizon. Of course, you can argue that it was a laggard for some time, maybe earlier this year when, you know, the growth stocks were really dominating the relative strength, and the value areas, which in the transports, all 20 of these stocks are in the S&P industrial sector.
Yep.
So, and those are just not, those are not the leaders for a big part of this year. They were leaders last year, actually. And now they're making new all-time highs. So leaders are not. How many of the major indexes, particularly in America, are making all-time highs?
Listen, you make an important point, right? We can make a sound argument that industrials are leaders and that tech are leaders, right? Depending on the time frame. Industrials look a lot better, like the price structure of industrials, because they didn't go down as much.
Well, also the S&P industrial sector has also made a new all-time high.
Yeah.
Has already been doing that, for the record.
When I look at the major averages, here's what I see. The best ones are back at those old highs, right? Testing those old highs. And the weakest ones, Dow, Russell 2000, I'm looking at you, are just about completing their reversal patterns now, right? So maybe that's the trade, as you've been saying, I've been saying. Maybe the trade for the next couple weeks or even next couple quarters is some sort of a catch-up in the Dow and the Russell 2000 relative to the NASDAQ and S&P.
Well, funny you should say that. I got one more chart before we transition into that. Show them the industrials, which is the next chart, slide 3 there. I just dropped it in. Why don't you show them the industrials? So all of the Dow Jones, all 20 stocks in the Dow Jones Transportation Index are in this sector index, the S&P industrials, that are making new all-time highs, which, you know, again, if you study bear markets throughout history, you're just not going to find a lot of new all-time highs in bear markets. I mean, it's actually the opposite, right?
Hey, why don't you address this question or concern from Matt in the chat? I think this is pretty good. I have something to say about this as well. I think maybe you're scaring people with your analysis of tech and the NASDAQ right now, running into those old highs.
I'm scaring people?
I don't know.
And then what is he saying? Because it's a double top?
Okay, so the strongest indexes, like we're talking about, industrials just blew right through this level. The strongest indexes are testing their highs from late 21, early 22, right? Whether it's XLK, semis, NASDAQ is right there. What he's saying is a double top could be forming here, right? That's fair. But is that the bet we want to make?
Well, it doesn't really help us, right? Here, let's just show what it is that we're talking about here. Here, I'm gonna move these up. I'm gonna put them up at the top, Alfonso. So just grab these. There's 4 charts. Just go there. I'm not seeing any double top, first of all. Second of all, any double top would not even be confirmed until that low break. So let's say this is a double top. We won't know that it is until it breaks the lows from last year, which
doesn't really help us.
Like a 25-30% correction in the equities market to confirm that this is a double top. So thinking it is, or hoping it might be, or worried that it is, like, doesn't help. It doesn't help the cause. Like, there's no, maybe it is, but it doesn't even matter at this point because it's so far from being confirmed that it doesn't even matter. You know, to me, you know, it's not so much about that I'm scared or that I'm scaring people. It's that we're running into overhead supply. I mean, it's just really what it is. And you can see the same thing in the S&P 500 next chart. Go to the next one.
So for me, looking at these charts, running into overhead supply, NASDAQ at 380, tech at those old highs, semiconductor, same level. It's not so much that I want to be fading tech stocks. I think even you have sounded a bit tactical there, selling XLK calls. Fine. I think something like that's okay. But
I didn't actually sell them, by the way.
Yeah, listen, I know. With everything
How do you know?
Because why would you? With everything looking as good as it
Collect
is
some cash
beneath the surface right now, rotation's picking up, right? The rally is broadening. Everything looks really good. The laggards are playing catch up. Do you really want to be out here shorting the best group? I think if anything, you kind of reduce your size in technology, reduce your allocation to tech, and kind of spread that love into more cyclical value type of stocks.
Well, they're not the strongest. Transports and industrials are making new all-time highs. These tech stocks are not. So
Tech
I would
stocks are
argue
the strongest stocks. Look at the year-to-date performance. Tech stocks have
oh
been.
my God, are we going to do this year-to-date nonsense?
Okay, look at 1 year trailing. Look at over any time frame.
I don't know. I'm seeing new all-time highs in some of these sector indexes. It's hard to argue that those are not the leaders. Anyway, it doesn't matter. It doesn't. They're all leaders. Let's be serious. They're all leaders. So that's what I'm looking at. Take a look at technology here, slide 3. Very similar, running into those former highs. It's not so much that it's a double top. Again, we won't know if it's a double top. Why is it blurry, Spencer? What the hell?
What am I looking at? This is terrible.
Spencer, what is this?
I got you. 1 second.
I don't understand why it keeps doing that. Like, what kind of amateur shit is this? This isn't Benzinga, Spencer. This is stock market TV. Like, what is this?
I got you.
This blurry chart.
How's
It's a beautiful chart. The people deserve to be able to get a good look at it. Not that blurry. It looks like I'm drunk.
You got to give people what they want. Yeah, give them
Give
what
the
they
people
want.
what they want. It's a beautiful chart.
So what does
Whoever
this,
made this? Just
JC,
really-
what does this chart have to do for you to stop talking smack about tech stocks over the very near term? What do you need to see from this? Does one big weekly stick out of this 175 zone do it for you, and then you're done?
I'll know it when I see it. How about that?
Right.
I'll know it when I see it. I mean, my gut tells me time. My experience tells me time. Give it some time, man.
Yeah.
Last time we were here, technology stocks got destroyed. So, we're just going to assume that the market forgot about that? No. I'm not buying tech stocks here. And then take a look at Apple and Microsoft, right? Which represents basically half of the XLK. It's the next chart there. See? So Apple trying its best to hold on above those former highs. It's doing a pretty decent job. Microsoft is doing a really shitty job of it, failing again. So, again, it's not about a double top. It's just being aware that there's overhead supply there, very simply. And if you go to slide 8, coming into a period of time that the S&P 500 is most likely to struggle.
Yeah.
I mean, I don't care whether you're a seasonality guy or not. I'm not a seasonality guy, whatever that is. I'm a price guy. But I got to tell you, over the last few years, this particular presidential cycle has moved in such sync with the seasonal trends. Yeah. It's really been the correlation, between the traditional seasonals and what the market has actually done is off the charts. So you could bet that now all of a sudden the market's not going to trade according to seasonality. You can make that bet if you want, or you can at least recognize it and use it as part of a thesis that would suggest, hey, the largest components of the S&P 500 are running into overhead supply at the time that the S&P 500 is likely to struggle for a few months. And we're seeing rotation into some of the areas in the market that have much lower exposure, much lower weightings in the S&P 500 that can do very well. So it's not so much that I'm scaring people, is that investing is a very selfish endeavor. I'm an investor so that I can make money. I don't know why other people are investing, but me personally, it's so that I can make money. And I think, and the data continues to come in, suggesting that the back half of the year is going to be very different than the front half. Yeah. And the leadership groups are going to be the ones that have very little exposure in the S&P 500 and the NASDAQ, like materials, like industrials, like energy potentially, right? And if the data suggests otherwise, and technology just breaks out and NVIDIA rips, and we get, okay, maybe that's not going to happen, right? But I got to see it. And for right now, I really haven't seen it. And then finally, let's just finish out with the small caps. Again, if small caps are ever going to start to outperform, this would be a perfectly logical area for that to happen. You see that?
Yep. I mean, I've been talking about these charts in Asia for 3.5 weeks now. I'm not a seasonality guy either, but I was spending a lot of time on that chart. I think you make an important point, right? We're not just pulling up that analog and saying, oh, it's time to go sideways based on the seasonal trend. No, we're looking at 10 other things first, and then we see the seasonal trend and we go, oh, wow.
Yeah, wouldn't it make sense if small caps start to outperform? S&Ps don't do much for a few months. Maybe they go up a little, maybe down a little, maybe sideways, maybe up and down, and small caps are the big winners. Again, I could totally see that. If small caps are ever going to outperform, this would be a perfectly logical place for that to happen. And by the way, Russell 2000, highest close since August of 22 on a daily time frame. Why don't you throw that up there? I remember when these perma bears, perma losers, as we call them, remember when they were like, oh, small caps are a leading indicator, and so the market's about to fall apart. Well, here they are, highest close since last August. Are they still a leading indicator, or does that not fit your narrative?
I don't like the way this is drawn.
Okay, how about the next one? Show them the next one. Tell me if you approve this one, bougie.
Yeah, that's fine.
Is that nicer? Is that better for you?
It's a monster level, and it shows the importance of the closes there. Look,
this new 1 year high. 1 year high. Not a lot of 1 year highs that you see in bear markets there, Strazza.
This base is going. I know the level is technically like 200-ish at those pivot highs, but I mean, when you look at it on a closing basis, this base is more or less completed. If you look at all of its friends and the bases that they've completed so far this year, you don't want to make the bet that the Russell 2000 is going to look different than the rest.
And think about the composition of the Russell 2000. I mean, you know, we talk about like these like marine shippers and some of these oil services. These market caps are tiny, dude. So like,
it's becoming a much more of a stock pickers market. In the
Heyo.
Right? Like, I think things are pretty.
Everybody drink. Everybody drink.
What?
No, because you hear that a lot. Oh, it's a stock pickers market. This is what they're talking about. Like, this market environment, like Strazza's actually right in this case.
It was an index investors market up until now. Yeah. Like, you could have hung out in the queues.
Well, this year, not last year.
No, the past 6 months, year to date, right? Yeah. And that probably changes, and we get into, like you said, a situation where we're getting a lot of sideways from the major averages and the popular passive vehicles, spiders, Qs, and you want to be kind of picking your spots more selectively in more of these value stocks. I also think don't sleep on speculative growth. They're catching rotation too, as the rally in tech kind of broadens down the cap scale. Right?
And when you say speculative growth, is that just a fancy name for ARK?
Small cap tech, small cap growth. Like, look.
Is that what you're saying, though? Indirectly?
It's so fun watching these companies grow up. What I mean about speculative growth would be like non-profitable tech. Uber, which we'll talk about. I won't jump the gun on it, but I'm excited to talk about Uber. Just had their first profitable quarter on a GAAP basis. And the CEO came on and said, this is it now. Every quarter going forward, we are now a company that makes money. So it's been really fun watching some of these growth stocks that got murdered in 2021 and 2022 really kind of right the ship, turn things around. And now the best ones are already starting to make money. I think that's exciting.
We got a question from Nipun. If you want to just quickly throw up slide 12, showing the Nifty 50 making new all-time highs, and look at Bank Nifty right after that, also making new all-time highs. You know, not all emerging markets are created equally. You know, we're seeing the relative strength out of Brazil and out of Latin America in general. We've already seen that out of Mexico. And Spencer, what is it with these charts? Seriously.
I got it.
God, blurry charts. I feel like I'm drunk. It's 8:30 in the morning.
Nippon also asked what our favorite sectors are right now. It depends on your time frame. I own just about every sector right now in some way, shape, or form. Outside of the defensive ones, I don't own staples.
Why don't you just buy the SPYs? Why do you own every sector?
Because I own the best stocks in each group. My point is, like we were talking about yesterday.
What are the best stocks in each group? What's the best material stock, out of curiosity?
I own SCCO. I've been in the SCCO. I own
so that's the copper, Southern Copper. All right. And then what about in what's financials? What's the best financial?
I am in Schwab, and also I have calls in Citigroup, which haven't been the best.
What about Interactive Brokers?
I have Interactive Brokers, but that's more of just a long-term thing, but I did recently add to it.
And then what's the best energy stock?
I got in the Schlumberger.
The old Schlumberger.
And Valaris I've been in Valaris for a long time now. As you know, I'm still in those warrants. I still love VAL. I think it's a great play.
What is the best technology stock?
Dude, I'm in a lot of tech stocks that probably aren't considered tech stocks, whether it's DraftKings or Riot. More spec growth. I'm not in mega cap tech right now.
Got it. More spec growth. Okay, so you're not in every sector. And then what communication stocks? What's the best communication stock?
I might not be in a communication stock. I'm sure I am if you gave me time to look.
Strazza, this isn't basic cable television where I'm just going to throw you alley-oops, right? I'm going to ask the hard questions.
Listen, communications is a space that is dominated by mega cap growth.
Facebook and Google.
Big names. I'm probably in something. It doesn't come to mind right now, but
what's the best industrial stock?
I'm in Uber, but that's not an industrial. That's a consumer stock. I'm in a home builder or two. So I'm surprised I still own.
So no industrials. You're in consumer stocks.
I'm in building materials. I'm in a name or two in building materials.
And what's the best real estate stock, Mr. I own every sector?
I told you I don't own real estate, but I'm interested. I'm not against.
So you own every sector except for technology and real estate.
Mega cap technology. I own small cap tech. I don't listen. I'm not interested in the most defensive groups. So like staples and utilities, I have no business in being in this kind of.
So you own every sector except for tech, real estate, utilities, and staples. So you're like in half the sectors.
I will get into real estate because I think there's going to be some real beta and some catch-up juice in real estate.
All right, now I'm just breaking balls. Spencer, we're going to bring in Todd Stone, which I'm very excited about. Todd Stone, we saved Todd Stone for when Strazza was back. Strazza, big fan of Todd. I am as well. Strazza would have been super jealous if we had Stone on without you.
Yeah.
Yeah,
there was somebody else. I think Mike Hurley. We saved Mike Hurley for you coming back too.
Yeah, Strazza, you don't know that people have been asking for Todd, but we waited.
Look at that. Who loves you, huh? Who loves you?
I hope that they'd be asking for Todd. Todd's going to be a regular. He's going to come on every month.
I think people would like that. Should we do some Uber? Do some earnings?
Yeah, let's do it.
Let's talk about it.
Oh yeah, got some good ones today. All right, let's start with the Uber here. As Strazza said, it was a very, very good quarter for Uber. Earnings per share well above estimates. The revenue actually did miss by a hair, but who really cares when they're profitable at this point? Their guidance was good too. I want to read you guys just some numbers here. If you look at Uber's history as a public company, they just reported for their Q2, right? So if you look at just the second quarter, so I'm looking at earnings per share, you can see how they've gotten profitable over the years. They went from hemorrhaging money to actually making money on a GAAP basis. So Q2 2019, their first Q2 as a public company, they lost $4 per share. Next year, they lost $1 per share. Next year, they lost 38 cents per share. You get the idea until finally this quarter, they have made 18 cents per share on a GAAP EPS basis. So trending in the right direction. Gross bookings came in above estimates, and the guidance did as well. It was a very good quarter for them. Don't know what the stock is doing this morning, but it was a good quarter.
So you don't know what the stock is doing this morning.
It's up like 4 or 5% last I checked.
Well, so what? All free information. It's up 1.5%. It's a 50 and a quarter.
Whatever. It's run a lot into earnings. So what you're describing, Spencer, is just like the typical growth maturity cycle of a company, right? A startup company.
Yeah.
First, the focus is on growing the market share as much as you can, dominating your space, right? Really exploiting the total addressable market as much as you can. You're worrying all about top line and doing whatever you can to grow that top line as much as possible. Then you hit a point where growth starts to not like peak and roll over, but really the trajectory of your growth rate really kind of, you hit that bell curve, right? And then you start to focus more on the bottom line and how we get there. So once the top line is in place, you think you're making all the money you can, maximizing revenues, then you bring in an operator, a CEO, a CFO, a C-suite that is experienced in doing this kind of stuff, and they clean up the income statement, right? They make sure that that top line that you spent the first 5 years of your business growing then falls to the bottom line because you get rid of any unnecessary expenses. That's exactly what Uber has done. Like you're talking about, they went from -4, -3 EPS to now they're profitable. I was listening to Dara, the CEO on CNBC this morning, said that that's it now. We're now a profitable company. We're not going back. And it's great to see. They're still growing. Like you talked about how revenue missed, right? They're growing at like a 16 to 20% clip.
Yeah.
So they're going to be given some slack on that. And the gross bookings, which is really the guide, they give like a gross bookings number into Q3.
Yep.
It came in at like 15, 16%.
Their bookings are so gross.
The gross bookings guidance that they gave was like $1 billion above the estimate. So yeah, it was good.
Listen, it's very simple. If this thing's above, what is that, 44, 45, it's above 45, you can own it all day, right? Target, what is that, 60, back up in the 60s?
Not that.
I think, too, this is one of those, like, investing doesn't have to be super hard, guys. Like, we all use this company every day. It's absolute monster in its industry. And it was down, what, 70, 80%? Long-term investors could have had a field day last year in this growth space, picking the best ones, like the highest quality companies at absolute like bargain basement prices. And look at what some of them have done in the time since. This is a great example. And no business even talking about Lyft. I don't even want to talk about Lyft on the show. It is the worst. I don't know what they're doing so differently from Uber. It's kind of embarrassing.
Speaking of not talking about Lyft on the show, we saw some unusual options activity coming in yesterday, and I got a memo saying we're not doing the hot corner today. Like, what kind of communist shit is this? Why are we not doing it?
So Lyft, this was a classic. I was looking at the flow that you were talking about this morning. Classic sympathy bid play, right? There was too much premium in the Uber options because they were reporting earnings this week, but these guys were clearly trying to play the Uber earnings report. They did it through Lyft because the implied vol was so much lower. They could get into that trade.
Can you tell me what your beef is with the hot corner and why you don't want to do it today?
You know, you want me to be completely honest?
I do.
The note went out, and about 30 seconds after it went out, I realized that for the first time ever, you know how these filings have issues. Fonz, throw it up. We'll just talk about it. So these filings have issues.
With no bumper?
The people who
I have to find it. Hold on a second.
So it was the CEO of Treasure Global who filed a Form 4.
But it was a Piker purchase. It was like $100,000 or something.
Just listen. He put the wrong ticker in the form.
Oh my God.
He put TGI instead of TGL.
Wait.
I caught it 30 seconds too late. So the note went out as if he was buying Triumph Global. He was not. He was buying Treasure Global.
Oh my God. Are you serious, dude?
The filing was wrong. So like that's why any of these automated services that go through these filings for you will not catch this. We caught it 30 seconds too late, so the note did go out, but we are well aware that this purchase is in TGL, not TGI. See the symbol after Treasure?
Yeah, that TGI is a real. So that's really funny. I mean, these filings, like, you really need to look into these things. Yeah. Like, you know, remember that one time that one of the senators like fat fingered Apple, I think.
We see it all the time. I was telling Fonz this morning, I was like, this is funny. I've never seen this one before, but it doesn't surprise me.
Are you going to show the filing? You have it?
I just showed it.
Yeah.
Oh, okay, nice.
Yeah.
Okay, and then what about the Devon Energy? What's wrong with Devon Energy?
I like Devon Energy, but I just try to
throw up slide one there quickly.
You know, the follow the flow list yesterday. So our unusual options list yesterday was just so depressing. It was all bullish flow in like the worst looking charts, and then there was just one name with bearish flow, and it was Uber, the one that we did want to be buying. So this unusual options activity, the past few weeks, I haven't been loving it.
It's just worth a look. I think 48 on Devon. If we're above that, I think you can own it all day. I think it goes into the high 70s. You know, Devon is Devon Oil Services?
Yeah. No, right. I think it's exploration and production. They do offshore stuff though.
You're right, TMP.
So the best, some of the best options flow that we've gotten all year did come while I was away. They were hitting that TAL education.
Yep.
Over and over and
over. I thought about you every time.
It came up
funny because Strazza loves Chinese stocks. Spencer hates Chinese stocks. I don't know what Spencer hates more, Chinese stocks or SPACs. What do you hate more, Spencer?
Probably SPACs.
And if it's a Chinese SPAC, forget about it.
So
forget it.
There's been a development there. I have always had some sort of exposure to Chinese stocks in my long-term account, my IRA. I'm done. No more Chinese stocks in the savings account for me.
Is this because of your experiences in Hong Kong? Is this a moral dilemma that you have now?
No, nope, not at all. This is all about money. No, it's not a moral dilemma at all. Okay. If this was about a moral dilemma, I would have been uninvested years ago. I didn't really learn anything new from that standpoint. But listen, there's some really sketchy stuff going on over there. Excited to talk to you more about it when I come see you.
Thank you. All right, should we get Todd on here?
Get him on here.
Todd Sohn, ETF and technical strategist at Strategist Securities. He's here. Let's get him on the show.
Yes.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
There he is. Todd Sohn. Nice tie, buddy. Looking good.
You're too kind.
Are you going to a funeral later? What are you doing?
New York City. What can I say?
Isn't it hot as shit? Isn't it like, how hot is it?
Well, today is lovely. The humidity has finally left us. So
Is fall here? Are we in the fall? Feels like it, huh?
Maybe.
Doubt it.
We got to talk about Steve's IRA here. What's
Best time
going on
of
with
year?
that?
No, hold on. Best time of year up there in the tri-state? I can't wait.
Not yet. September. 1 month away.
Yeah, September. We're not there
September,
yet.
October. By far and away, especially like if you got like no kids, which I know, Todd,
Yep.
we're out of that game already. But in the old days, when you don't have any kids, September and October, everybody's day drinking all day Saturday, all day Sunday, football everywhere. Everyone's back from the Hamptons. Everyone's back from the Jersey Shore.
Sure.
Like the city is bumping on in September and October. Great months.
It's great.
Except for UN General Assembly. Stay away from the city.
Stay out of Midtown because the
stay out of
traffic is
Midtown.
insane.
Yeah. Avoid New York altogether if you could. Learn that lesson the hard way. Todd Stone. I'm seeing the highest close for the S&P 500 in over a year. 4 months in a row now that does that. NASDAQ highest monthly close in over a year. Yeah. 5 months in a row it does that. Dow Jones Transportation Average, highest monthly close ever, going all the way back to like when the dinosaurs existed. Never seen a monthly close this high for the Dow Transports. Russell 2000, highest monthly close in over a year.
Hold on. Todd, is this cheating what he does during every market cycle? How he skips to the monthly charts and cheats and says that they're at new all-time highs before they really actually are.
It's a time frame thing.
First of all, the month ended yesterday. I don't know what continent you're in.
I'm just checking. All right.
You know, what if I run a monthly strategy and I buy when things are at a new high? You know, that's how I'm looking at it.
See, Todd is usually very honest. He's good chart police. He's good chart police.
Todd, do you have any problem with my monthly candlesticks?
No, I think it's great. I think it's actually a great time to zoom out right now.
You're in the clear.
Right? When is it not a good time to zoom out?
Oof. It's always a good time to zoom out. I think that's very important. And I'll add to the NASDAQ 100, right? As you said, is on this great winning streak. In the near term, you're trading 24% above the 200-day. Okay, so maybe that's at risk of a speed bump. But when you get that extended, that's actually really historically extreme. It's also consistent with major market lows.
It's a thrust. Right?
Yeah, exactly. It's the breadth thrust. And it happened off of 09, 03, back in the 90s, 1990. So, yeah, you could be at risk of just a normal pullback from an extended level. But that's when you got to zoom out and remember that this type of extension from trend is typically consistent with a new like higher.
So you're saying like some early inning stuff. When I look at the fact that everything seems to be working, I was telling JC yesterday, it almost feels like a buy everything market. That feels more middle or late stage stuff to me. If you had to guess, where in this cycle are we? What inning are we in?
The ending thing's always tough for me. Earlier rather than later. How about that?
Todd, my grandfather back in the day went to a Yankees game that was like 22 innings or something like that. So when we talk about what inning it is, who cares?
Then the top, at least the first half of it. I mean, if we're going,
we're at the bottom of the second inning.
Yeah, sure. I mean, when you look at leadership, it's industrials, it's discretionary tech, little energy materials perking up, but
isn't that what normally leads off the lows? Aren't those the initial leaders in cycles?
Typically, that's what you want to see. I like that over staples and utilities and healthcare. So, I mean, the leadership's excellent.
Todd, let's. We're here. We're in the business of making money, right? The back half of this year, so far, granted, we're a month in officially, Strazza. We're officially a month in to the back half of the year. Yeah. And the leaders in this first month of July of the back half of the year is very, very different than in the first 6 months. Do you think that continues? Does materials, energy, financials, should we expect them to be the leaders in the back half, or is that getting too cute?
It's a little cute. It's a little cute, but I do agree with it. I think, and especially if if you've been long NVIDIA, how much more NVIDIA you buy in here? Great momentum, but have clearly extended. Maybe not the most timely thing there. I look at energy, and I look at flows to energy ETFs. There's been basically an exodus from there. Everyone has left the space.
Commodities in general, right?
Yeah, commodities too, and the energy equities. And so if I'm just looking for something that is going up, but is not overly crowded by my work, then I look at energy, I look at commodities, I look at materials. And if you just want something timely, then yeah, I think that's probably the place to be.
Where in materials? Because materials, speaking of getting cute, materials is like, you're talking chemicals, you're talking rocks.
Copper,
miners.
copper miners, not gold miners, copper miners, steel miners, more cyclical type of miners.
Why do you make that ugly face when you talk about gold miners?
There's not. They don't do anything for me. I'm sorry.
No, that's fair, but that's a valid question. Like, you make this face, like
they have a time and a place, and I don't think it's right now. They come in during panic scenarios, and maybe an event will pop up, and they'll have their day for a couple of weeks. But I just don't see it. And even with the underlying metal, yeah, you can wait for the price appreciation. The chart looks good, but on the other hand, equity's on fire. And if I would need a little bit more defensive posturing, I can buy some bonds and collect the income.
Can we talk about that? Because we're talking about rotation into energy, financials, materials. That smells like higher rates, doesn't it?
Yeah. So copper versus gold, right? Working higher, that would suggest higher rates.
Regional banks outperforming REITs.
Regional banks were a sentiment buy. I think everyone was panicking about what was going on back on there. Charts obviously aren't great, but sentiment buys can go much farther and longer than I think anyone would expect.
Because we're not in a reversion to the mean business, we tend to revert beyond.
Reversion beyond the mean.
What do you guys think about this BOJ news and them kind of expanding the band?
It was inevitable, I feel like, right? You pull up a chart of just global rates, and there's a clear outlier there.
Yep.
Right? It's like putting a 7'2" guy in a room with a bunch of people who are 5'10". Doesn't make any sense. So, I guess the idea behind it is that capital will come home, right? Maybe out of U.S. or Europe and back to Japanese equities. I don't know what the effects of that are. Right. What I do know is that Japan is still one of the best markets in the world. Did you see Toyota this morning? Toyota's at a new high.
Yeah, what do you guys
automakers in the world?
So Asian Pacific equities, when I look around the world, like they kind of need to pick it up more than any region. What's your guys' take on Asia, Japan, China?
We like Japan, and you got a little ahead of yourself earlier this year. You paused, but now Toyota's reaccelerating. Honda, Nissan, the autos look really good there. Korea actually made a new, I'm not sure what the time frame is, but multi-month high there without Samsung actually hitting a new high. So that's interesting.
And what are you looking at for that? EWY? You just use the...
EWY or just the Kospi local terms. Yep. The one, and you were talking about this before, the one that I struggle with is China.
Yeah.
And China to me is a trading vehicle. It's not an investment.
Yeah.
I have a chart in front of me that shows the 10-year annualized return of China internet KWeb is less than 5% per year, but has a standard volatility of basically 40%. So if you can time it, go ahead, buy China.
I like how you said that. It's not so much an investment, but it's a trading vehicle, and there's a time and a place for it.
Yeah, it's a high beta trading vehicle. Even the MSCI China, right, the more broader index, over the last 30 years has annualized at less than 1% per year. That's a terrible investment.
It's crazy.
Terrible. You've made no money there.
It's a great point you're making. Hold on. Strazza changing the topic here. Back to rates.
Why?
Yeah.
Why? I don't know, because it's a $130 trillion market that's going to end up moving commodities and stocks. So it's kind of a big deal. I don't know if you heard. So, Todd, can we talk about this 10-year yield? Like, if we're getting this rotation into some of the types of sectors that do well when rates are rising, like, are we going to get new highs in the 10-year yield? Bonds going lower? Because you look at large speculators, and they're all betting on that.
Yeah.
When large speculators are a consensus, particularly to such extremes, I don't like being part of that crew. I don't want to be one of those.
Typically doesn't work, right?
Right. That's what I'm saying.
I truthfully, I don't know if there's a great rate call.
That's why I'm asking you.
I can make the case for both directions.
Right.
My only concern is if rates go higher, what's the pace? Because if it's a real acceleration like last year, that's going to agitate stocks. I think people will start to panic again, like you did last year. If it's a slow grind, chop higher, I think equities can adjust to that, like they have over the last few months.
And you think these speculators can be right, man?
Everyone has their day every once in a while, right?
So you're not taking that off the table. Like, rates could rip, and the commercials could be wrong, and the specs could nail it.
Perhaps. I wouldn't rule it out. I don't want to say it's a 0 or 100% thing. We know that.
I hate
But
being on their side, man.
I tend to agree. I mean, they've been short S&P. Maybe that's for hedging purposes, but the same thing here. Equities have ripped as they've been short. I will say that the interesting part about rates, forget the 10-year and the direction. Yeah, the Fed hiked 25 basis points last week. That is more fuel to go to money market funds. And so since this is an amazing stat, since the October equity market low, you've had $900 billion go to money market funds. Wow. It's like 4 times as many into equity ETFs. So, and there's reasons for that. If I'm a corporation, I can park cash and generate interest and pay off debt and whatnot.
You're saying 4 times went into money market, then equities.
Yeah. Yeah. You've had about 250, 260 billion.
And that was bad move. That was bad move.
Yeah, oh, yeah. It sounded great. 5% halfway to do a decent year until the S&P goes up 20, until the NASDAQ goes up 40. It was great.
It's hard to regret that, though. I mean, it was a safe move, right?
Right, but that's my point. Like when it's like, what, you know, when you ask the question, like, why would I do anything else? I'm getting my 4 or 5%.
Yeah.
This is the reason why you do something else.
Yeah, it's a great example that will look back on opportunity cost. You know, they'll put it in the CMT textbooks. But the interesting part, though, is that money market allocations are still growing as stocks are rising. I think until you get money out of those money market funds, you can't really say sentiment is too euphoric.
Yeah.
Is this what they call the dry powder? You're saying?
Yes.
Yeah, I guess.
Sidelines, Strazza. They're on the sidelines.
The thing about the cash on the sidelines, though, is it means a lot. The meaning is different today than it was 10 years ago.
Well, explain that.
So 10 years ago, I was getting 0% on my money market funds, on my cash. Right. So eventually it has to leave the sidelines. Now it doesn't all have to leave the sidelines. You know, maybe a little bit.
That was the Tina. The Tina, remember the Tina?
Tina, Taranau, whatever the name is.
Okay. This isn't like basic cable television where we just throw you alley-oops. We ask the tough questions over here, Todd. Ask the tough questions. Best performing sector in the back half of the year. And you're already a month in, so you already got a little sneak peek.
Can I say energy?
Yeah. You can say anything you want.
Financials, maybe. Yeah, that's the contrarian-ish in me.
Energy, I like it. I'm with you, bro. I own a shit ton of the Chevron. Bro.
I kind of, just because it's more timely, I'm aware that people have left ETFs there. I mean, tech is great.
Where in energy?
Ooh. I still like the big majors, the integrated names. I still
integrated, so not the oil services that have been the leader so far.
Oil services have done well. They've been the leadership, but I still like.
What about these offshore drillers, like these little guys that they went bankrupt and now they're back? You know,
those are usually the home run plays, but I stick to at least up the cap scale.
Okay, that's fair. That's fair.
I like energy. I would agree with that answer, and I would also say you don't want to overthink the subsector kind of relative strength right now. Like you probably get rotation back into E&P, and you probably just better off just keeping it with the majors.
Just either buy the equal weight energy.
Yeah.
If you don't want to
do
XES
or people actually trade those equally weighted ETFs? Like we look at them every day, but does anybody actually trade them?
RSP, the equal weight S&P 500, that one, the popularity of that has surged because of the concentration atop the S&P this year.
Really? Okay.
Todd, what's number 2? Energy number 1 in the back half of the year. What's number 2?
Look at the Transocean chart. Look at RIG. What a nice breakout again today. Sorry.
I still like industrials.
Industrials number 2. All right, number 3.
Can we stick consumer? Can we go discretionary?
What's the worst performing sector in the back half of the year?
Oh, staples.
Wow. I like how quick you are. Todd, on point, baby.
We're just
fan favorite over here on the morning show, Todd Stone.
Not utilities?
I'll give them They're the same thing. Oh, well, not really the same thing. Either way, why would you buy either of those if you can get 5% in money market yields?
Hey-o.
Seriously. They're the ones who are losing the most.
Yeah, but there's no reason to buy those.
Totally. Yeah.
Unless there's some story there with the equity, one of the individual names, the takeout, whatever you want to call it, but the dividend yields aren't competitive.
Hold on, so materials don't make your top 3? Are they 4?
I just don't love the construction there. You got gold miners.
What if it's just chemicals?
Whoa. What do you have against coal miners, sir?
No, gold.
Don't you remember his face? He just smelled like somebody farted next to him when he was talking about the gold miners before.
These guys here.
Todd, what about if it's just chemicals?
I can work with that.
So if it's just chemicals, you throw it in the top 3?
Close.
All right.
Three
all right.
and a half.
I'll take
3.5.
that. I'll take that.
Two and three quarters.
3B, 3A and 3B.
Three.
Is there any chance at all that, because I mean, I feel like we're all just talking about this rotation. Is there any chance at all that money keeps flowing into mega cap tech and the indexes float higher? Because it smells to me like what we're talking about here is you're going to have huge winners underneath the surface, huge sector winners, stock winners, and a flat S&P, for the next several months, and maybe we get that whip at the end of the year or something like that. But is there any chance that we keep getting a steady bid in tech, so the S&Ps and the Nasdaq keep going higher too, or no?
Yeah, why not? Everyone in the pool. Though the prior to what you said, tech pausing and everything else going up, I love those types of markets because it reflects the internal improvement while the index just chops around and becomes, more timely in a way.
I believe the kids these days are calling that alpha, Todd.
Alpha.
Yeah. Oh, yeah. I mean, it's great for active playing right here, right? I mean,
Yes.
It was difficult for active managers in the first half of the year, and now, maybe this is the environment for them.
And in the back half of last year, we got that too, Todd. Where the mega cap growth names weren't doing well, but everything else was. It could be that again.
Yep. Yeah. Especially energy, right?
I like it.
All right, Todd. Always a pleasure. Thanks a lot.
Todd, you're the man. Come back soon.
I appreciate it. You take care.
Dude, he's the man.
Todd's probably a little bit disappointed we did not talk about Steve's adventures at all. I think that's all he wants to talk about.
I'll call him later. Isn't he the best though?
He is. He brings good perspective. I mean, when it comes to the best technicians in the world, I feel like we have a pretty good idea at this point who our favorite technicians in the world are, and I throw Todd Sohn right in there. I put him in the category.
Yeah. Yep. 100%. I'm with you. Love Todd.
All right.
Spencer, can we read some fun headlines?
Hold on, we gotta bring Kimmy.
Let's
Bring Kimmy, and then we'll go with the headlines.
Do it after Kimmy. Do it after Kimmy.
Okay.
All right.
Kimmy.
What's up, guys?
What's up?
Oh, not futures, not today for once.
No, it's August, right? People probably selling, month end yesterday. Things were really getting going. It was kind of slow day overall, but
I like how you are pressing this apple long, huh, Kimmy?
well, I'm not long yet.
No, but I mean, but it's been going up is what I'm saying. Like,
Yeah,
obviously.
it's stuck at the Bollinger Band at like 196.70. So we'll see if it pushes through. A report's on the 3rd in a couple of days.
What's today? Tuesday, Thursday. They report.
Yeah. So a couple of days. So we'll see if it gets a little bit of a move on before earnings, and if it does, maybe it goes back to new high. Or
This thing's been basing for a month.
I know it's been stuck there.
Yeah.
It's kind of been stuck there. So we'll see how it goes. We got AMD tonight too. We'll see if that gets a move on today, pre-earnings.
Yep.
We could see.
So yesterday, CrowdStrike, Nike, and Snowflake. Those
3
are the
for
three.
3.
Crowd I was
Kimmy
in from the
Sokoloff
week
for a
before.
slow day. Kind of a great day for
Crowd
you.
Crowd was from 2 weeks ago, right? Yeah.
Right. So then I had a nice little sell yesterday in that. That was a nice little sell. I told people in the room, crowd, when it was at 158, if they had to stop out last week or they're still in it, they could add to the position at 158 for a target of 162. It did get going. So that was nice. Hey, all you need is one trade a day, right? So 1 or 2 trades. You don't need a mass amount. So, sometimes people are like, I try to come up with different ideas because not everybody wants to take every trade, or sometimes you miss trades. Like I miss my own trades because I'm, talking through other trades or looking for other trades, right? So I try to give multiple opportunities to people, but sometimes.
Can you just walk me through this? What you're looking at in Apple this morning? I want to be very clear on the levels. Talk to me.
Okay, so it's stuck under the Bollinger Band, like 196.70. It came close there yesterday, but did not touch it. Did it? No. So it's got to break above that 196.70, 196.72, and get going for a move back to the high, which is what, 198.20.
Got it. So that big wick that you had in the middle of July, you want to get back up there.
Right. Sometimes names
Yep.
push through the Bollinger Band. Like look at Crowd yesterday. Pull up Crowd. It finally pushed through that 158. I had a trigger there. I'm an alert. That's why I alert people. If you want to get in Crowd, it's trying to push through the Bollinger Band at 158. Let's say they stopped out on the 19th because it reversed. I stayed with the trade. But I was saying people could have added or bought the stock yesterday for the first time on Crowd. Right,
Like
to
it.
push through 158 for potential move to the high, which is 162. So now we got to see if Apple could push. Maybe it doesn't do it today, maybe it does it tomorrow, maybe it just doesn't do it, right? So it's not a trade until it like kind of triggers, and sometimes a trigger fails. So you have to be cognizant of that too, right?
Love it.
All
Keep
right,
up the good
guys.
work, Kimmy. 3 for 3 yesterday. Nice.
Yeah, we'll see.
Kimmy's off to her private trading room. There's the link on the screen, QR code there, link in the chat, link in the description. She's there every single day calling out her trades. You can trade with her if you get into that room. Do it.
All right, thanks, guys.
Have a
See
good
you
one,
later,
Kimmy.
Kimmy.
Have a good
And
one.
just, she's talking about these Bollinger Bands. What I like a lot of things about what Kimmy does, but one of the really interesting things that she's doing, which is very counter to what we do as trend followers generally here at All Star Charts, is Kimmy is very mean reverting in nature. Like the fact that she's buying Apple and kind of going with that trend, she works both ways, but I constantly see her, sort of fading rallies, looking for that short mean reversion, buying those dips. Like it's very, so it's from what my experience with her, it's very complementary to all the other things that we're doing. The time frames are different too. So the fact that the strategies and the time frames are different than the other things that we're doing, it's pretty awesome.
Yep.
That's real diversification, is having
different
uncorrelated strategies.
Yep. Her strategy can work.
It's not like, I own U.S. stocks. I own emerging market stocks. I own small cap stocks. Like, you're not diversified, bro. You own a ton of stocks. Like, that's not diversification.
Wait, going back to the cash conversation for a second with Todd. I mean, unless you're over the age of what, like 40, you don't know what it's like to really make it to earn interest.
No,
right?
I bought treasuries for the first time in my career. I've never been like opposed to it, but I bought them for the first time in my career. I opened a public account a few months back.
Todd makes a good point, because remember, like, random people above the age of 40 don't matter, right? Like, they're not going to make a dent in the market. Todd makes a good point on some of these institutions, some of these corporations that they can get into treasury bonds. That makes more sense. And these corporations and institutions, they're actually going to move markets, right? Some random 40-year-old doesn't matter.
Yeah.
So it's a good point, because he's right there.
Nobody cares about you 40-year-olds. Tell them, JC.
I mean, I don't see why anybody would care.
All right, should we go back to the earnings? We got a bunch more here. Wait, Steve, what do you want to say before the?
Yeah, I got 6 minutes till the market opens, and I got to hop.
Yeah, where are you going? Where are you running off to?
It's Tuesday.
He's going to practice his golf game.
Steve,
first of all, I need to practice my golf game, but that is not where I'm going.
Steve, while you were gone, JC would leave me at 9:30 on Tuesdays. It'd be me and Pat just hanging out.
Let's do it. Is Pat coming on today?
Yeah.
John, Pat, Ian.
We got Pat.
So Strazza, go ahead.
All right, so I'm looking at, you're asking me about all the stocks I own, so I pulled up my account and I'm looking at some of the price action here this morning. Cameco is ripping, and I'm trying to find out why. So I'm in the TradingView news alerts, which is supposed to tell me why Cameco is up 3.5% today. It looks the way it does. Let me just read these. The 3 best nuclear stocks to buy before Oppenheimer hits theaters.
It's a great headline.
Okay.
Three
Great
uranium
headline.
3 uranium stocks to watch as Oppenheimer movie sparks nuclear power interest. Is this real? I mean, come on.
Is it real?
Listen, if you're one of these
course it's
spammy, websites, like clickbait places, like, those are great headlines, man. I'm not creative enough to come up with that one.
Steve, do you want to know?
Yeah,
actually,
their nuclear power plant is finished or whatever. It's the first plant in the United States in 30 years or something. And
yes, and there was also a report yesterday about Canada's turning on their demand for.
Everybody's turning on their demand.
Yeah.
Larry McDonald's been all over this for a year and a half, 2 years now. Nuclear is very much becoming a thing, particularly in Europe. They absolutely need it and have no other option right now. It's kind of crazy to me that these uranium stocks haven't, been moving higher at a faster pace over the past year.
CCJ, Cameco. headquartered in Saskatoon, Saskatchewan, home of my favorite Canadian Football League team, the Saskatchewan Roughriders.
Am I on Motley Fool? No. What?
No, he's asking you that because they have those headlines all the time.
Oh.
Like BuzzFeed type stuff.
Yeah, that's why. So clearly you're not, because if you were, you would know that that's the game, Strazza. That's how the game is played.
That's the game is played. Yep.
That's how the game is played. Let's do a couple more here. Let's talk about Caterpillar real fast.
Yeah, let's talk about Caterpillar.
There you go.
Oh, yeah.
That's an industrial that I'm long. Caterpillar. I'm in Caterpillar.
All right. Let me
Keep it
get
simple.
let me get the
Remember
chart
how
out.
mad you guys got at me when we were trying to buy this at 170? Remember? I remember exactly where I was. I was in the woods in my backyard, and I was sitting on a log, and I'm trying to convince you guys that if this, because remember what happened here. We were reverse engineering the bull market and saying, if this is a bull market, and all signs are suggesting that it is, this was like this spring, right? All signs are suggesting that it is a bull market, then industrials are not going to completely fall apart, and Caterpillar is not going to break back below the 2018 highs. That would not be a bull market. So if it is a bull market, industrials are going to get a bid, and Caterpillar is going to rip.
Yeah.
And you guys were like, it's such an ugly chart. But to your credit, and Sean, you both agreed that the risk reward was very favorable. And that's why you were like, all right.
I didn't hate the trade. I thought it was cute, and there were probably easier ways to make money at that moment. But I mean, it speaks for itself. We bought really.
Dude, those options are up 350%. And they don't expire till January, dude.
It went in a straight line higher right after we got into it. We were basically just buying the bear trap breakout, right?
It was, remember, a week later, we bought the IWM. It was the same trade. Yeah. It was the same thought process.
And it's the same thought process buying energy 2 weeks ago, right? Or
materials. See? Right? Somebody understands me. There's a method to my madness, Strazza.
I'm far more comfortable putting on a trade like that. The more comfortable I am that it's a true and sustainable new bull market. And back in October, I believe that a lot less than I do today. Today, I'm putting on trades like that left and right. Is that fair?
Well, this was like in the spring. This was like in May or April or something.
Oh, I thought it was last October.
When we bought Caterpillar in small caps?
I thought it was at the absolute lows.
No. This was like in April or May.
Got it. Fine. Sure.
Yeah.
All right,
you
with the bottom line
conversation, I remember exactly where I was sitting. I remember yelling at you guys from the woods.
You have a weird memory. You really have like a photographic memory. I don't know how you remember all these moments in time.
Well, it's this trade has paid for half of my pool that I'm putting in. So it's got a special place in my heart, this Caterpillar trade.
All right, Caterpillar beat. It's up about 1.5% this morning.
This pool's expensive, bro.
All right, everybody's having a good year. Relax, okay?
Let's go to one of the disaster stocks. There are actually several disaster stocks today. One of them is Zoom Info, ZI. Let's get that chart up on the screen. Where is that? There it is.
Time for a name change.
Yeah, time for a name change. What is this? Very confusing.
Anyway, the earnings are whatever, but the guidance was horrid. It came in below estimates, and they actually lowered their revenue guidance for the year by about 4%.
Why are we talking about this shitty Canadian software stock?
It's down 20%.
Wait.
Okay, that's a good reason to talk about it. I'm just wondering.
Why is Caterpillar up as much as it is? They don't report yet. Was this an upgrade?
What? Yes, they just.
They just reported. Got it.
That's why we talked about it.
I don't know if you heard, but industrials are making new all-time highs, and Caterpillar's like king industrial.
Double-digit top-line growth, record adjusted profit per share, strong ME&T free cash flow.
Caterpillar's making all-time highs because of that recession. Global slowdown.
It's funny. Did you see the GDP report that was out yesterday in the Eurozone? So GDP is rising. Inflation expectations are falling. All of these things that they told us wouldn't happen. I will say, though, there were some comments about gasoline prices ticking back up in the U.S. I don't think we're done yet, right? Like, it was very well advertised that inflation was going to cool a bit. We were seeing that in the charts since middle of last year, right? So that's finally happening. But when we look at these commodity price charts, right, just look at the chart of gasoline. Gasoline prices are rising everywhere. If it hasn't gotten to the pump yet, that's one thing. But they are rising everywhere. And if what we think is true about crude oil and XLE, rebounding off of these prior cycle highs and moving higher. JC, you had a chart in the post yesterday of inflation expectations in crude oil. Inflation expectations and inflation will move with these energy futures.
Quickly, I got to hop, but Joseph's asking me if one day JC will tell us what's in the box behind him. Got some Cuban cigars in the humidor, and the football player behind Strazza is the one Jeremy Shockey from the U. Speaking of orange and green, go Canes, go Canes. All right, guys, love you guys. Adios.
Didn't even talk about HSBC today, but that's all right.
We talk about it every day.
I know. Well, they had earnings. They had earnings. Is all. That was my point.
They make money,
and it's up. It's up 1%. Zoom info all-time lows.
Dude, this thing is like the most boring grind higher you'll ever see.
Yes, it's
and
incredibly
that
boring.
Is not a bad thing.
Incredibly boring.
All right, adios.
So, so Nikki's makes an interesting point. 59% of oil price is controlled by OPEC. Maybe, yeah, great. And guess what? 100% of that is reflected in the price chart. Right. Hit the shower, Strazza. How do you know that I haven't showered, Sam?
How does he know that, actually?
I've had a busy morning. I know I'm greasy. John Carlo would have yelled at me if he's here. Where are my pads? All right, what's next? When's Patrick coming on?
I don't know. Whenever he gets around to joining, but we have a few more. That I'm going to rip through these right now. Okay, so I thought I would throw you a bone, Strazza. Yum China. I don't know if you had any KFC while you were over in China, but the airport. No. I like seeing what's on the fast food menus in different countries,
dude. So we tried to go and eat that cheese sandwich in Thailand. Did you see that? The Burger King one? It's
yeah.
It's buns and like 15 slices of yellow cheese. And I was going to eat it because my stomach was absolutely destroyed. Anyway, we went and they didn't have it. What I will say real quick is, yes, there are KFCs in a lot of these cities that we went to. Did see some KFCs. But in the Philippines, they have their own fried chicken. First of all, they're frying chicken better than anybody out there. And it's called Jollibee. It's one of the largest stocks on their local exchange. And it's in the United States too. If you go to some big cities, you will see Jollibee franchises, but that is a very, very Philippine thing, and it's awesome. Yeah,
Jollibee. Okay. Jollib. Got it. Okay. Anyway, Yum China down about 2.5% this morning. There are numbers on the screen. There's a chart. Relatively muted move. Going through the rest of my list here, we have
Yum China that you had up, right?
Yeah, that's Yum China. That's KFC in China.
Yum US looks a lot better,
huh? Yeah, does it actually? I don't know.
Attach China to anything, and it looks worse.
All right, fair. Let's do a couple of healthcare real fast. We had Merck and Pfizer this morning. Merck beat top line, beat bottom line. Stock is up about 2%. Pfizer down less than 1%. Here's their chart as well. Interesting divergence in the past couple of months. Merck and Pfizer. Yeah, look at that. All right. You have thoughts?
Oh, that's why this is happening to uranium yesterday. It's this African coup, I'm pretty sure, that's pushing prices higher. Anyway, sorry.
Wait, what isn't there a coup in Africa? In all seriousness, I'm not even trying to be smart.
But it's something to do with Niger has they have a lot of the uranium that is exported to Europe, and I think there's going to be some sort of a supply chain hiccup there. They have some sort of new leadership. I would have loved to ask Todd. JC hijacks all these interviews. I would have loved to ask Todd just how they navigate, client conversations and strategy around some of these more developing or more emerging, even frontier markets out in Asia, many of which have geopolitical concerns that come with investing there, right? So I love what he said about China. Can't really invest in it. You could trade it. I wonder if that's the approach with some of these other countries. I don't know.
We got Pat here. Let's bring Patrick on.
Yeah.
You ready?
Yeah.
Yeah. All right. He's ready, I think. Sure. But just pretend he's ready. Whatever.
Bumper. I need a bumper.
Hey, fellas, how you doing?
Hey, Patrick. So listen to what else was interesting about Asia. This Patrick reminds me of you. Me and Giancarlo were dying. Vapes are all illegal there. Like illegal. No, I'm serious. They're still smoking cigarettes out in Hong Kong, like in restaurants and stuff. It's like New York in the 90s in these cities. And people think vapes are like terrible. Like, we went to the sketchiest black market in Bangkok where it was like a black market. And they were selling like used car parts and like pirated music and DVDs. And then like a guy came out with like a jacket. He had like all vapes inside of it. And that's how we got vapes in Bangkok. But it's a thing out there. There's no Juul, no vaping. They're very bad. They're still smoking cigarettes. It's interesting.
Oh, boy. You happy to be back?
I leave again tomorrow.
Really?
But yeah, it's nice to be back. Yeah. I got to do a quick Pennsylvania, New York trip. I haven't seen my parents in I don't know how long. I'm usually up there in the month of July visiting, but not this year. So gonna go up for a few days. I'll be back on Sunday.
Nice.
You gonna come with me to Vietnam straight from Future Proof in September?
Is that when you're going right after Future Proof?
Yeah.
That's coming up. You know, this summer is really winding down.
Let's go.
To which part? To Future Proof or to Vietnam?
Vietnam.
Oh, okay. Anyway, wait, let's bring up the chart report.
Apparently, we're not doing the morning show at Future Proof, just so everybody knows. The conference will still be amazing, just a lot less amazing, because we're, for some reason, not doing a morning show. I don't know if you heard that news, Spencer.
Well, I was never really confident that we were going to be doing it in the first place, so it's hard to produce a show like this from the road.
You remember how hot it was last year?
Man. We did our presentation at 8 a.m. for that reason.
It's probably better off that way.
Yeah. All right. Chart report.
Yeah.
Where are we at? We're right here. It's on the screen.
Yeah. There were a lot of standout themes, at least yesterday. Seasonality is being talked about. You know, it's the end of the month. People are looking at these next few months. They can get a little bit rocky. August, September. Things pick up again in October. But even in pre-election years, you know, it's a pretty strong year in the presidential cycle. But these next couple months, and it would make sense, right? I think the way JC described it in his chart, if you scroll down, is it's a well-deserved break. If the S&P was going to take a break, this is kind of a spot where it would make sense. And the two charts above that, too, are also seasonality related, talking about that kind of August, September weakness. Another big theme was small caps. You know, people are looking at that performance at the end of the month. I think it was up 6% small caps, the Russell 2000 in July. That's pretty standout month. We're knocking on the door of new 52-week highs for the Russell. And just a few weeks ago, you know, the narrative was these things, not even the narrative. They were on life support. They were really testing those former highs. So now we're talking about new 52-week highs maybe for the Russell. That's a serious change. Another big one was the energy sector. All 11 sectors closed higher in July, but energy gained about 8%, and it was a real standout. You know, breadth is continuing to improve. Another big one, I know you two talked about this a little bit, but China, the pickup there, you know, nice little head and shoulders, inverted head and shoulders, and K-Web there, and what that means for emerging markets. You know, China's been such a drag on emerging markets that if it can get going, maybe emerging markets has a chance.
Yeah. Or just look at emerging markets without China, right? You can X China out of every one of these indexes, and it's that way for a reason.
Yeah.
They're often doing.
You know, most people, if they have exposure to emerging markets, they have it through EEM. So
you're right. Yep.
You know, from an analysis point of view, we can look at it like that. But most people, if you had significant exposure to EEM, you're underperforming. Another big thing that got talked about yesterday was copper. I don't know if you guys have talked about that yet, but I think it's interesting that you're seeing copper pick up along with this new on strength in China. I gotta imagine those two are related. What do you think,
Totally.
Steve?
100%.
Yeah.
Listen, I don't know where China's at with the lockdown news and any new like health concerns or viruses over there, but it seems like when news is bad about them like locking down or something, that's often when price starts to look forward to it getting better. And I know it's just been like an onslaught of ugly news for China all year.
Steve, you were over there when the headline came out that they were turning on the money hose, so to speak, right?
What headline is this now?
In the China's government's going to support their own economy again, right? They're going to, as opposed to what they've done for the last 3 years. So
yeah, it's really interesting. You know, we were having some conversations out there where people who are very much in the know were making arguments to us that they don't even have any FX reserves left. So like we sit here. I'll just one quick anecdote. We sit back here in the US and often you'll hear the narrative of it's only a matter of time until China catches up. You know, they'll be the new global superpower. It's just a matter of time. You know, it's not really an if, but a when. And that's kind of like the prevailing like common knowledge here, I think, for a lot of us. Over there, you talk to locals in China or in Hong Kong, they'll tell you the complete opposite. It's only a matter of time before this thing all comes crashing down. Xi's taking money. There's no reserves left. It's a completely different thing over there.
Well, you know, it's funny. I mean, before COVID, I don't know if you remember that all the like social conflict that was going on there in Hong Kong. Remember all the riots?
that was, I think that was during COVID.
So
that was right before, and then COVID, like the news story kind of
Yeah.
just took that over, and you didn't hear anything about it. I mean, they probably weren't allowed to protest.
So
'cause of all
everything
lockdown.
changed in Hong Kong at that moment, and the city has never been the same, may never be the same. They passed a law that more or less said, you're protesting in Hong Kong, Chinese authorities can come in, take you, and put you in jail indefinitely. And we met some people who were very involved in the protests, and has relationships with people who are still in prison and have been since 2019.
Oh my gosh.
Yeah, it's crazy.
So you're saying they got a lot of social issues they got to deal with before they surpass us.
Yeah, I mean, the city is amazing. It's a great time, but everybody that I met there would be like, you should have seen it 5 or 6 years ago. You should have seen it in 2015. You should have
Well, to bring it back to copper, it sounds like a lot of their spending has been focused on infrastructure, right? So that's why you see these two moving hand in hand, right? You see as maybe China's reopening, whatever, maybe it's just not going into recession, whatever, but copper's picking up as well.
Listen, it makes sense to see things like copper start working, small caps start working. You know, a lot of these material stocks are now working. Energy picking up the pace. A lot of those areas, whether it's small caps or energy futures, were kind of resting on those prior cycle highs, flirting with some structural damage to their trends. They dug in, they held, and now they're rebounding. And I think a big catch-up trade is on here and likely to be the theme of at least the third quarter.
Yeah, I mean, there's definitely a theme brewing there of steel stocks, right? SLX, look at that thing. I think it's like at a new 12-year high right now. Beautiful base, beautiful 2-year base. Yep. So that materials trade, the industrial metals, that's really picking up.
Pat, what's not working? Are there any
not working? That's
you would be short?
What is not working? That's a really good question.
Well, today it's only one day. A lot's not working, but pretty much everything in the Dow, not everything in the Dow, but a lot of Dow stuff is working, right?
You know that wasn't my question.
No, I think that's a really, really valid question, and the fact that I'm struggling to come up with an answer to me is information. The defensives, maybe, like utilities.
But you can't go shorting them.
No, yeah.
I mean, we can find individual stocks that aren't working. That's not hard.
You can go short some pot stocks. I mean, that.
The conversation about China, I'm thinking about Macau, so you just looked up Win. Win's not working. What else is not? How's LVS doing?
Lift's not working.
Lift?
Las Vegas.
Lift is. I saw an interesting take from Josh Brown. You know how X is trying to be the everything app, right? Which, by the way, that's messing me up so bad. Every time I look for the Twitter app on my phone, I'm like, what? Where is it? And then
we were talking about this yesterday, the exact thing.
So Josh Brown had an interesting take. He was saying X won't be the everything app, but Uber might be. And I was thinking about it, I was like, man, I order my food from Uber. I order my transportation from Uber. I could see it, venturing into other areas and getting my credit card in other ways,
They are a powerhouse, and they've figured things out financially now. This company is going to be printing money in the future. I mean, think of what a beautiful cash flow business it is. Subscription model. Not only do I pay them for rides, but I pay for Uber One because, like you said, if you're getting Uber Eats and you're doing Ubers all the time, you better be paying for Uber One.
Right.
If
PSA, if you have the Capital One Saver card, that's the one that I have. You get Uber One for free. So
really, there you go. They're going to team up. They're going to make more partnerships like that over the years. They'll be real powerful and teaming up with the credit card companies more and more. I also, out in Asia, the one thing about their business is it varies. It's a very local business, right? So Uber or operating a cab might make a lot of sense in New York and New Jersey and the tri-state, but it could be significantly different out on the West Coast in, say, Nevada or somewhere in the middle of nowhere. And it also varies even more so, especially with regulations, when you go overseas. So they did something out in Southeast Asia where they basically sold their whole book of business to Grab. Like they didn't even want to operate there. So I think Grab is the name of basically the Uber out there. It's a stock ticker symbol Grab. They do the same stuff. I don't know exactly why Uber didn't want to be in that market, but like I said, there's a lot more traffic. There's probably a lot more regulations. There's weird stuff about who's allowed to own cars in these countries and all this, licenses that probably come with it. So I think from like a global growth perspective, it seems like if they're selling off like books of businesses in certain regions, they've already kind of grown around the world to where they want to be. So I think they're very much like we were talking about before in the maturation phase of their life cycle.
Interesting. Interesting that they're selling off the businesses. I feel like it would be easier to acquire the smaller businesses. You know what I mean? But what do I know?
Well, I mean, that's why they brought Dara in, right? That's why they brought him in, is for this purpose.
Oh, okay.
Credit to them.
He's killing it, by the way. He's
leaving, right? Isn't he out?
No.
Dara Kashka.
I can't say his last name.
Yeah, I thought he was. I could be wrong, but I remember years ago, Travis Kalanick, when he was CEO still, he was talking about how when Tesla comes out with their fleet of self-driving electric vehicles, Uber wants to buy like 100,000 or buy like 1 million, whatever, buy the entire fleet. And then just have these self-driving electric cars. Like, think about the overhead there. You have no gas, no driver, and you could just give rides for $2, $1, whatever. And then they posed that question to Elon Musk. They were like, why wouldn't you guys just start a Tesla app that hails?
Own it.
Yeah, and he was like, you know what? We might do that. So
maybe
they will. Maybe Tesla will roll up into Twitter and everything, and it'll all just commingle, and it will be the everything else.
Probably easier for them both to just make some sort of a deal. But I could see how there could be some competition there in the future. In Hong Kong, all of the Ubers are Teslas, and they're lovely. And in Tokyo, cars are just incredible. They're Toyotas, but they're like souped up, like limo Toyotas. They're like soccer dad vans.
Where is this, in Hong Kong or Japan?
They have footrest. You put your feet up, you recline. It's like you're sitting in like a movie theater seat.
In a big roll or something.
Steve,
like a Toyota van.
Before you left, I asked you to keep an eye out for Neos and XP, Xpeng, and Lee. No, none of that.
I kept an eye out. First of all, nobody uses Didi over there.
I was going to ask about that.
It's all
really good. Screw that company. God damn.
Spencer, what do you got against Didi?
Oh no, that was like the biggest rug pull in the history of IPOs.
Yeah,
like literally in the history of IPOs, there has never been a shittier one than that one. Remember they IPO'd, and like a week later, they were being investigated for fraud. Like how that ever got through, beyond me.
You can't trust anything that's going out or going on in the capital markets in China.
Thank
Especially
you.
Talking to people out there, these people are so over it. They're done. I met a lot of people who are just, they keep their savings in a safe in their office somewhere. They have no business even being in the banking system. They're completely uninterested. They think, currency devaluation will eventually hit hard. I know the Hong Kong dollar is pegged right now. Maybe that doesn't last forever. They're not even comfortable holding their local currency, let alone going out and buying local stocks.
Thank you.
Met too many people who just want nothing to do with it. So it was interesting.
Yeah. Couldn't agree more.
A lot of chatter about AMD in our chat.
Well, they report tonight, so that's why.
I'm in some Micron calls. Oh, should have got out yesterday, huh? All right. Okay.
Yeah. You want to hear something funny? Yesterday, I was looking at Airbnb right before the open. It was at like 155 or something near there. I was like, I should probably, I made my money back. I should probably sell. And then I got on other things I forgot. And then at 3:59, I was like, oh, how did Airbnb do today? Oh, not great. I should probably sell like right now. And I went in to do it, and I ran out of time. The market closed on.
There are two stocks that I want weakness in so badly right now. I own small positions in both of them already, but not nearly as much as I want to own for the long term. One of them is Uber, like we were just talking about. Yeah. I think, again, I'll say it's one of those investing can be easy type stories. And Airbnb is the other one.
Yeah.
These are services and brands that I think will be around for the rest of my life. And if I can buy them at some low prices and hang on and look back 5-10 years from now, it's hard for me to imagine I'll regret those purchases.
I think that's the hardest thing is thinking in different time frames like that, and that's what you're doing right now. You're thinking long term, but then with AMD, you're thinking, oh, I want these calls for next week. And that's difficult.
Yeah. My Micron calls expired.
Yeah,
it's so hard to think about different time frames, especially when they're coming onto one portfolio.
Like, I wish like in my TD Ameritrade account, I could have like portfolios within the portfolio.
Yeah.
You know what the best way to get you to think on multiple time frames is? Invest and trade on multiple time frames and then go look at your accounts. And you'll learn really quickly what to and what not to do.
It's true.
And you learn what works for you, what your style is.
Yeah.
All right, let's just take a quick look at things here. I mentioned we're, as far as what's working today, not a ton, mostly red, sprinkles of green, but the major indexes are down except for the Dow. What else? What's working? Industrials looking good. Staples, utilities, home builders all looking all right. Transports, aerospace looking fine.
Russell's about to break out.
What is?
Yeah.
Small caps.
Yeah, it's knocking on the door. What, those February, March highs, right?
Mid caps too. Does this happen by the end of the week? It kind of looks to me like it's about to.
You know what I think is hilarious? I don't know if you guys watched like the intraday tape yesterday. Oh my gosh. Like pull up like a 1 minute or like a 5 minute chart. The last bar, like the last 5 minutes of the day, just an absolute tape bomb. Just boom. Huge buying. Pretty much did the entire day in 5 minutes yesterday at the end of the day.
Bull market tape, Pat.
And end of month window dressing, but who cares?
Yeah, it was almost like someone threw in a giant trade just at the last 5 minutes and just boom.
Well, let's talk about like what that means, right? Window dressing, Spencer. It's basically fund managers or asset managers making sure that what their clients see in that monthly statement is what they want them to see.
Right. I think it probably, not probably, definitely matters more for the quarterly ends. I don't know how much like
statements too. So it's still a thing. Yeah. It's less of a thing, definitely. But they're trying to reduce the amount of questions about what they did wrong when those statements go out.
Yeah, that's right.
Right. Absolutely right.
All right, should we do some recess?
Yeah, I feel like we've been doing it.
You're probably right. The last half hour. Pat. This is what Pat and I did while you were gone, Strazza. It's just hang out, right?
Anything in the chat? Any questions? We could throw up some charts here. We got.
Drop your tickers in the chat, and we'll if we have time, we'll pull up a few right now. If we
like them, we'll chart them for you.
If we like them, yeah, that's the.
Oh, am I on today, or did Pat take my job? Okay.
No. Today's Tuesday.
You
Me
guys-
and JC.
Guys, I low key love Chart Request Live. That show is so fun to do. It's fun to watch. It's awesome. Like
I watched you guys last Thursday. You crushed it. I was on the plane. So, yeah.
If you don't know what we're talking about, actually, when this video ends, it'll redirect you automatically to the Chart Request Live video, which isn't going to go live, obviously, until 1 o'clock Eastern. But it's a show we do every Tuesday, every Thursday. Just hang out and drop your tickers in the chat, and we'll bring them up on the screen. If you want to cut the line in the chat, email us, questions@stockmarketmedia.com. And I do have a bias. I give preference to the people that email us first over the people on the YouTube chat. Now the tickers are coming in.
I do the opposite. If you email me, I give preference to the people who don't and DM me.
Oh.
No, I'm kidding. I just don't get around to reading my emails as often as I wish I had time to.
All right, a couple interesting ones here. Stickers that we have not talked about all that often.
Also, PSA, we have a BX chart ready. That's Blackstone. Let's talk about that one. PSA also 11:30. Tune in live on Twitter. You can find it on Pat's feed on the chart report feed. Twitter Space.
I'm supposed to bring up slide 1 here. Is that what's happening?
Last time we did Twitter Spaces, I was in some sushi restaurant in Ho Chi Minh City, I think. Sean, right? That was fun. That was good.
We missed you on Spaces. This should be good to have you back. And now that you're watching charts again, we'll have a lot to talk about.
I miss Spaces, man. Yeah.
BX, Steve, what do you think?
Blackstone, industry leader. I like these asset managers. There's a bunch of them. Carlyle, I think, is still public. KKR. I don't think you get K1s anymore. They've all made the transition to corporations, which is nice from a tax accounting standpoint. And look, with something like this, very clean base, right? What is it? Just below 110, call it like 105, 106, 107 there. Get the breakout. And then the path of least resistance is higher. This one's heading back to those old highs around 150. Is that 50%?
Not
big
bad.
Yield too, right? Big yield too. What's the yield on these guys now?
Oh, good question. Let's find out.
3.3%. So yeah, I like it.
It's got a dividend.
Look, KKR looks even better. You already got like the reversal in KKR. So, I look at Blackstone and KKR. It's like the same conversation. You always want to buy the strongest one. KKR is a little bit cleaner here. Use those February highs, call it like $60. And, you're only getting about a third of the yield there, though, 1.1%.
I was watching JC on the Compound Show from last week, and Josh Brown made a comment. The second Josh Brown reference today. Well, and I've done this too. He was like, "Oh yeah, if I'm like underwater in a trade, but it pays a dividend," I go, "Hey, at least I get that dividend."
I know.
I've definitely done that too.
What do you call that? That's like a certain bias.
It's bargaining. I think you're bargaining with yourself.
That's one of the key psychological biases I think that they teach us about in these textbooks.
Yeah. All right, let's do recess real fast and then we'll hop off.
What's the bias?
What's the bias? What?
What's the bias where you are selectively paying attention to only information that supports your thesis?
Confirmation bias.
Confirmation,
yeah.
Hey, so for recess, guys, I bought a lot of stuff out in Asia, but what am I most excited about? You should see the calculators I got.
What?
Calculators.
What?
They don't make them like this in America anymore. We had a really funny moment. I think Giancarlo got it on camera.
Hold on, I'm going to full screen on this. What is
I forget where we were, but I saw a calculator behind a register somewhere, and it looked so good. I just had to touch the buttons, and the poor woman behind the counter was looking at me like I was all sorts of crazy. But I was like, I just have to touch it. Where did you get it? And then I stumbled upon in Hong Kong a electronic hardware store. Right, they had old calculators, old screens, listen, they do legacy tech brands really well out in Asia. They're all from there, whether it's Sony, Panasonic.
I had no idea you were a calculator geek.
So these would be worth money. No, I'm dead serious. These are actually collector's item. What?
Yeah, okay.
Want one? I got 3. JC doesn't want his, so
I have a phone. Thanks. I'm all right.
Pink
Steve, we need to get you a calculator watch.
for my girlfriend. Blue for me. No, but they're great. The buttons are the best on here. It's all knockoff Casios. If you find them in the US now, very hard to find like an actual old Casio. You can tell by hitting the buttons. They just don't feel right. But these are legit. They weren't cheap either.
So you have to go to China to get the authentic version.
I brought a bunch home.
Okay.
I have
Wow.
more.
What's a bunch?
DM me. I bought 6. I had to get a second suitcase, guys. I got a second suitcase. You want to see some other trinkets?
It's absurd. Sure.
I'm getting into tea. This is 80-year-old Lipton's tea. So tea is a big thing out in Asia. I never really understood it, but I drank some delicious tea, made friends with somebody who's big in the tea space. So we're getting into it. Be like a new hobby. Probably drinking too much coffee anyway.
Big tea guy, huh?
I would like to become a tea guy. So new hobby. We'll see how it goes. I'll keep you updated.
Try to be a
All
tea
right.
guy.
Pat, you got anything for recess?
Have anything for recess? Not really. Yeah, pretty boring.
All right. My recess is I'm feeling a little bit sentimental today because it was on this day 1 year ago. I was on I-80 driving a U-Haul truck, moving
Ooh.
back to New Jersey
From Detroit.
from the suburbs of Detroit. Yes, from Michigan, back to the great state of New Jersey where I am from.
I'm a big fan.
What do you miss about Detroit the most?
Oh, easy. There's like two things. One is that the roads were designed with cars in mind. So all of Southeast Michigan is a giant grid system. So you don't really have to know where anything is. If you just say the cross streets, you can get there just in your head, right? You don't have to know directions at all. So the entire southeast part of the state is there's 8 Mile Road, right, from the movie 8 Mile, and then 9 Mile and 10 Mile, and it goes up to like 20 miles or 30 mile, and then there's perpendicular cross streets. So, and it's a gigantic grid, so like you'll never be lost because it's a grid. So I miss that. I miss the Greek food.
Didn't know they had Greek food.
Some
Good
people.
Greek food.
That's pretty much it.
But seriously, like you like Detroit, you had a nice time out there.
Yeah.
Is it good to be home? Like you happy to be back in Jersey?
Definitely. The whole point of coming back was that I have like my people are here, my friends, my family, and so we've made the most of it. It's been an amazing year, and looking forward to more. So
when did you start working with us, Spencer?
It was actually just the start of this year.
Right.
How
would you say that's going?
I would say it's going well. I don't know. How would you say it's going?
We like you here. We like you.
I don't know. Shit, this is getting deep all of a sudden. All right, guys, let's wrap. We got Spaces in about an hour, 11 a.m. Eastern time. So stay tuned for that. We got Chart Request Live at 1 o'clock. Steve, are you doing Pardon the Price action today? Do you know with JC?
I can do it. I'm down.
Well,
but it's my understanding. I don't know. We'll find out.
It's not a live show. If maybe hop onto our channel, maybe later, and maybe it's there, maybe it's not. Thank you to our guests today, Todd Stone, Kimmy, Sokoloff, Pat Donuella. Thanks to everyone in the chat. If you're watching us on YouTube, drop us a like, hit subscribe. We'd appreciate that. If you're watching us on Twitter, maybe hop over to our channel on YouTube. We're at Stock Market TV on YouTube. And that's a wrap. Everyone have a good rest of your day. Go make some money.
Can I just say it's so good to be back and hanging out with you guys every morning again.
Likewise,
we missed you.
We're glad to have you back.
All right.
Cheers.
Run it. I can't take no loss. I don't even know what it costs.